everybody. I'm Peter Grant with Zaner Metals in Denver. You're watching This Week in Metals, and you're watching my colleague Peter Thomas. What do you know, my friend?
I know that it was an amazing week again. I actually got one of those things that you get at the clinic after a car accident that you wrap around your neck, and I slapped that thing on because I was watching copper swinging, 17 cents, and I think we had $139 move in palladium. I was kind of like
Yeah.
strapped in. It was an amazing week for trading.
Yeah. Well, we'll get to Palladium shortly. That was the big
Sure.
mover of the week, certainly.
It really was, yeah.
But gold ended up 1% on the week. It was the second consecutive higher weekly close.
Thank you.
I'm a little bit, concerned with the momentum. I'm not terribly impressed with the action on the upside, and it's looking a little flaggy, if you will, a little bit like a flag might be forming, which would suggest that we might see some additional tests to the downside. I don't know. We'll have to see how it reacts
Yeah.
to the resistance levels coming up. The big concern continues to be ETF outflows. Through Thursday
Yes.
last week, we saw the 24th
Yes, it
consecutive
was.
session of outflows.
Yep. Yeah. I
So,
mean, there has been, I would call the market anemic rather than anything else. I think we've seen some tremendous profit taking. But what's interesting is that something that we've really been talking about for over a year is what happens when Asia comes back. And they've been stepping in, and
mhm.
the crops in Asia have been very good. The rainfall they were looking for, they got this year. So there's going to be a lot of disposable income to catch up. If you recall, a lot of the wedding season and things of that nature were delayed due to COVID. And so a lot of gifts are being purchased. A lot of the jewelers are reporting they're still seeing a premium from Thailand all the way to India on gold. So there's a lot of positive things going on, but I agree with you. The market does look lethargic, and what we're seeing is we're seeing buying on dips.
Yeah, and we've mentioned this the last couple of weeks as well,
Sure,
that the
sure.
outflows from the ETFs is a big amount of
It's a large amount.
goal
Yeah,
to overcome with the
yeah.
physical buys from Asia. So,
It's a lot of
if we,
deflation. There's no
yeah,
question.
I think if gold finds a catalyst for the upside, that and the investors start coming back in and buying
Hmm.
the ETFs, that's and that would probably stimulate the physical buyers in Asia even more
Yeah,
because they tend to be price sensitive, and if it starts moving up again, they might be inclined to jump
step.
on the
Yeah,
bandwagon.
either what happens. Customers only buy when it rallies, and we've seen that that's been changing. The IQ, the traders getting far more sophisticated. So there's a whole lot of stuff going on here, and 1740 is a big number, and we need a little bit of a rally and at least some continuation and or holding to establish this level as a base.
Yeah, I found some encouragement in a couple of closes late in the week above the 20-day moving average.
Uh-huh.
But I'd really like us to get back above 1,800 bucks.
Yeah.
That would go a long way in my mind, anyways, to kind of reaffirming the underlying uptrend.
Okay.
And it just, as I said already, it just doesn't seem they have the momentum to do it on this run. But
Well,
we'll see if the buyers step in if we get a little bit lower.
if we
Um,
get a little bit lower, it's just nothing but an opportunity. And if a lot of people that were going, oh shucks, I missed it. Guess what? It's coming to you, and be ready. Because it isn't going to be there a long time, I think.
yeah. So the big news last week, obviously, was the Fed.
Yeah.
The policy was no surprise in that they held steady.
Yeah.
Um,
In there.
Everybody
I
was.
personally think we will not see a rate hike in my lifetime. Okay.
Oh, I
Maybe
hope you're around a lot longer than that, Pete
I don't know, man.
Thomas.
I don't see it happening. I think with 1.9 sloshing around, and now they've gone from the infrastructure being 2 trillion to 3 trillion. I don't know.
I'm hearing whispers of 4 trillion.
Yeah.
So
So
yeah.
I mean, that at some point this stuff's going to catch on fire. And it's just a matter of when. That's all.
Well, the market was really interested in the dot plots for this particular FOMC meeting, and like the, the Fed, the members of the Fed are thinking that we're not going to see a rate hike through 2023.
Yes.
There seemed to be, some optimism about rate hikes a little bit longer term, but I think that the reality is that's really dovish, particularly given how optimistic they are about the economy. So
Yes.
they're anticipating 6.5% GDP in
I saw that number.
2021.
Actually, that came out today. They were discussing that, and they were saying 6.5 to 7% growth, and they said they are talking about surpassing China's production from their recent meeting, and so that means that China's obviously going to have to raise their number because they can't let that happen, right?
Right. Well, think about it,
Yeah,
6.5% growth and interest rates at the zero bound. It
right.
doesn't make a lot of sense to me, but um, they certainly don't want to start hiking rates and bring and slow things down. I think they're very keen to get this recovery moving and get some momentum going, and I guess that makes sense.
Sure.
But we'll have to wait and see how it factors into inflation.
It's
So
going to be an interesting the next couple of months.
yeah,
Absolutely.
so they're anticipating 2.4% inflation this year.
Is that the
That's
number?
the
Would that okay? I didn't see it when it came out. Okay,
Yeah,
good.
so that's a little bit hot, and then it would moderate.
That was warmer than they were looking for. Absolutely.
Yeah, so it's a question of can they really keep it close to their 2% target without it getting out of hand? And I would point out that import prices, are already at 3% year over year.
And
So
shipping prices have doubled, so that
yeah,
number is not coming down. Baltic Dry, it has really been in a foot race to how fast it can elevate.
yeah, yeah.
You know,
And a little bit of bad news last week with respect to this economy that perhaps tempered some people's optimism. Retail sales fell 3% in
dismal.
February.
Yeah,
The market
surprised a lot
expect
of people.
Yeah, the market expectation was plus 0.3. So that
Right.
was a big surprise. And industrial production similarly down 2.2% on expectations of plus 0.3. So
So there you have it, folks. We
yeah,
had some dismal news on the economy, and the stock market reflected it. Was down and could stay down for a while.
well, the Fed helped things out. The stock market kind of liked the idea of no rate
They had
hikes
to,
for two
they,
more
they
years.
they broke the syringe out, and just
Yeah,
say, "Here, have a little more money. It's all good, right?" I
right,
mean, man,
right.
they got them so hooked on that sugar.
Yeah, so when the Fed announcement came out, both the Dow and the S&P closed at record highs. And so that takes a little wind out of the sails of gold as well. It just
Yeah,
creates risk appetite. People pile into the higher risk assets to get the return,
sure, of course.
the safe havens tend to suffer in those circumstances. But in that respect, I think gold held up pretty well.
That's what I was going to say. I mean, the numbers we're at. If we stay here with all of the news, I'm pretty happy.
Yeah.
I'm pretty happy. Listen, I got to ask you, what do you think of the ETFs being converse on in silver, where we added 526,000 ounces into
Yeah.
the silver ETFs, and they're bailing out of gold like there's no tomorrow.
Well, I think a lot of that goes to expectations of the next round of stimulus that's going to be
I
focused
think you're exact. I think you're exactly
on
right.
infrastructure,
Yeah.
because a lot of that infrastructure spending is going to be focused on 5G and
Oh,
Um,
just all kinds of stuff. I mean,
yeah, all kinds of stuff that's
anything that
associated with electricity.
any high speed transference of electricity, a low R factor that we've discussed with silver is great for. So also a shout out to the silverbacks. Hey gorillas, I know you guys are buying like madmen out there on Wall Street silver. They invited me over there in Riddick, and they're very sincere. They're buying a lot of metals. So I don't know if it's having any effect, but it's interesting to watch.
Right. So yeah, I think that again, the infrastructure bills probably bodes well, not just for silver, but for copper and the PGMs as well,
Hmm.
and commodities in general. I mean, when you talk about spending somewhere between $2 and $4 trillion on infrastructure, there's going to be demand for everything, steel and concrete and lumber, and I mean, the list
Cobalt
goes
and
on. And
the
energy.
list is almost unending, which is why I believe a lot of the mines are getting tired. We've discussed this. We had Dr. Davis on with us here live, who runs the platinum palladium mines in South Africa, and also some other individuals involved in mining, and we're just not going to have enough metal. And I think we have to give a shout out to Daniel Comboni, who just did a show on underwater mining. I think that we're going to have to go to the ocean and start taking product off the ocean floor now, because we aren't going to be able to get enough out of the ground now. So this is a very interesting time for metals. I believe we're going to have acute shortages periodically, and it's going to be a foot race to see who can get to the recycling shop the fastest, because they're going to be the guys picking up the weight.
Yep, absolutely.
Yep.
Um, so silver still, kind of, it ended up 1.5% last week. Again, the second consecutive higher weekly close. Kind of, generally positive within the range and in the lower half of the recent range, as a matter of
Yeah,
fact. I'd like to see $27 again. And then I'm
I agree.
fairly
I agree.
confident
Yeah,
about a retest of
of
$30.
$30. Yeah, not even a question. And I think our friend David was pointing out, there's only, now this is interesting. There's only 2 million 1,000 ounce bars of silver in the world, and they're getting snapped up. And guess what, guys? They keep picking these up, and we're going to end up in a situation where we have a legitimate shortage of product. So let's keep an eye on silver. I think the gorillas should keep buying. I see no reason why it isn't going to be a good long-term investment. And I think it goes to what Pete and I have always talked about since we started, which is dollar cost averaging is the way you accumulate silver. You buy dips and hold and add whether it goes down or up. Doesn't matter. Set some money aside and pick it up.
Yep. Um, let's move on to the PGMs.
Let's do
Uh,
that.
Platinum was down 0.5% last week after sort of eking out a 3-week high. It then faded, into the weekend. Again, a little bit concerned about the momentum here on the upside, its inability to sustain those gains. Um, Again, above the 20-day moving average is encouraging. Holding the 50-day moving average is encouraging.
Hmm.
But I'd like to see a little bit more momentum on the upside. But
Well,
overall,
the ETFs, Pete, very strong.
yep,
Platinum added 18,000 ounces, if I recall. This morning was the posting. That's a lot of platinum.
yeah.
So
And I think
you
as
know,
as stimulus hits, and
right.
people are starting to get their checks, and um,
And
the
we still have a computer chip shortage, which consumes platinum. That's going to be interesting too. We'll have to see how that ends up. Nor nickel mines. I got an email from someone that said, "How did you know our wall collapsed and that our mines were being shut down?" And basically, I said to him in a rather kind way, I said, when you pour 30 ton of concrete into a hole and you have 148 concrete trucks in a row, I go, you can put all the lipstick and tutus on them you want and try to sneak them in, but somebody's gonna notice, you know? I
Right.
mean, so they're saying right now, and I think we repeated, they're 3 to 4 months out to be back in production on the two major mines, which breaks down to, let's say, 14% of the output in the world market of platinum palladium.
Yeah, I heard that Nornickel's guidance was cut 15 to 20%, not just for the PGMs, but for nickel and copper as
Nickel
well.
and copper as well. Very well. I'm
Yeah.
glad you threw that in there. Yeah,
So
absolutely.
that's a pretty big
It's a
hit,
big it's a
big production.
significant hit because that feeds most of Eastern Europe's production. So they're gonna have to go somewhere. And but I will say this, their vaults are very rich and deep right now. They've been putting a lot of product back. So I don't know how hard this is gonna impact them. They might have to go to the vaults.
Yeah, so the interestingly, so palladium was up 11% last week.
In one day.
Third consecutive higher weekly close, set a more than 1 year
Yeah.
high at 2755.50. That's just $120 off the all-time high. To
10% off the all-time lifetime high of the
Yeah.
product. Yep,
Yeah,
absolutely.
and it was interesting because it came just as Europe announced February auto sales, and they were horrible. And
Yeah,
yet Palladium went through the roof, and it was
yeah,
largely because I think of the Nornickel
yeah.
supply
Oh,
issue.
absolutely. And we had the rumors 2 or 3 weeks ago and announced them on the show. And those of you that follow us, I hope it helped you.
Yeah, absolutely.
Yeah.
So, speaking of those European auto sales, they were down 20% in February year over year. It was the worst auto sales since 2013. And that includes the UK in these figures. But like Spain was down almost 40%.
That's interesting.
Yeah.
Yeah. Huh.
So, and yet they seemed, maybe because of the supply crimp that they're expecting from Nickel, but they were inclined to look past that and
Yeah.
buy up palladium like like crazy.
Crazy. Yeah.
So
Well,
big range breakout. We had stayed bullish throughout this 1 year consolidation period.
yeah.
And I'm just sort of based on the retracement we've already seen. I'm very optimistic about a retest of that 28.7550 high, and
Okay.
then it wasn't much
Three
more.
thousand bucks is the number, baby.
Yeah,
That's
3,000.
it. I mean, we saw rhodium run $7,000 in 2 3 days. I mean, palladium could become the next rhodium, and look out because then there is no stopping that train.
Yeah. Well, it's certainly we'd anticipate a larger supply deficit this year now because of those two Siberian mines being
Yes,
offline
well put.
for another
Absolutely.
3 to 4 months.
Oh yeah.
So,
Oh
um, copper,
yeah. Yes, sir,
it had
Doctor Copper.
big swings in copper, but it ended the week down just over 1%.
Had a nice rally going into the close today. Yep.
It
Yep.
was the worst, or I'm sorry, it was the first lower close in 7 weeks, though. So I think the uptrend in copper is safe for the time
I
being.
I will tell you that to our guys, you remember we try to tell you what's going on in the physical so you can guess, what's happening in the futures. And there's an area referred to as the concentrates, which is it's a refining process for copper. And if you watch the concentrate numbers, because China's the number one consumer of concentrates, almost 61% of it goes to China. And the copper concentrates were at the highest price to consolidate almost since October of 2010. So that means there is a shortage of product. That means there isn't enough ore around. That's when the price of making a concentrate, when the producers have to raise their bid, the profit level goes down, and subsequently the price of copper concentrates go up. So it's very interesting in that the underlying commercial side of copper is saying higher prices.
Yeah, I would agree.
Hope that made
Uh,
sense.
the the broader fundamentals support it. Again, swinging back to the infrastructure plan, if that gets
Yes,
passed, it's going to be huge demand for copper. Just general recovery in the in not just the U.S. economy, but the global economy as
global
well,
economy, yeah,
is going to bode well for copper longer term, and
absolutely. And
bode
they're
well for
jabbing a lot of
recyclers.
arms in England, and they're getting stuff done. There's vaccines is out there. It's getting in, it's getting into the general systems in the EU. So I agree with you. We could see a global pop here without a problem.
Yeah. So this week, we've got existing home sales out on Monday,
Yeah,
6.5 million is the expectations. New home sales out on Tuesday, expectation 879,000. That's going to be down
I
a
got a
little bit from
cav-
January.
I got a caveat on that. We're talking to a banker that writes mortgages. He was telling me a lot of people are backing out of their contracts because of the price of lumber. In some areas has tripled, and the average house is in some areas is up anywhere from $30,000 to $50,000 due to the cost of lumber to build it. And people they're going, wait a minute, I wasn't approved for that. My banker isn't going to give me an extra 20 or 30 grand to do this. I'm right up to the max here. And so that number could be very interesting. I think our viewers should keep
Not
an
to
eye on it.
mention interest rates. Just to
Yeah,
circle back around, the
yeah,
10-year traded as high as 1.743% on Friday last week, the highest since January of 2020. And so, the market seems inclined to test the Fed's resolve. The Fed's saying no interest rate hikes, but
right.
the market's saying, eh.
What the 30-year mortgage was a little testy too, wasn't it?
I would imagine. I didn't look at
Yeah,
mortgages specifically,
yeah.
but
I was
they
looking at
tend to.
mortgages. I was just to see what the reality of the market was, and it was up. I was surprised. It was pretty healthy little rally it had there.
Yeah. So that's
Yeah.
gonna weigh
Yeah, I think
on
that I'm
home
glad you brought
sales,
that
new
into,
home
yeah.
sales.
What else
And
we
then
got?
finally, durable orders on Wednesday,
Okay,
plus 0.6%. But given the
stimulus.
retail sales and industrial production numbers that we saw, I wouldn't be surprised if that was a disappointment
Yeah.
as well.
Okay. Yeah, I'm
Yeah.
thinking, well, that number, because it's a carryover, like you're pointing out aptly. I think that realistically, if we're going to see any purchases, washers, dryers, things of that, any heavy durable goods, I think it'll probably be next week or the week after that when we'll see that injection of money.
Yeah. As people get those stimulus checks.
Yeah, exactly right. I mean, you can buy a washer dryer for $1,600, and that's what people are getting checks for, and they're sitting in their house looking, locked down in many of the states here, and hey, I need a new washer. It's running all the time, and they might just happen.
Yeah. So with that, I think we've covered all of our bases.
Yep.
I'll ask everybody, as usual, to give us a like and a follow,
Yes,
and
please do.
visit us at zanerpreciousmetals.com if you have a need for physical metal.
And don't forget, Pete in the middle of the week puts out a recap. Got a real good response from it this week. A lot of people were confused, as as everyone was, by some of the strange rallies, and I think you did a good job of recapping that. And that's a freebie. Pete, where can we get that?
You can sign up for that at grantongold.com.
Okay, great. So really, you get a week's recap with us on this show. You get a midweek catch up. So use us. We believe we're a good asset to help you make better decisions in your metals.
Thanks, Pete. With
You got
that, I am Peter Grant with Zaner Metals in Denver. Have a great week.
Pete Thomas in Chicago. Thanks for dropping by.